Hello, I'm Eric Corman, CEO at League of Education Voters and the parent of a high school junior of the global majority in the public school system who is accessing special education services. I advocate because of my son, so that every student can get what they need, when they need it, and how they need it. This webinar features closed captions. To access captioning, just click on the live transcript button at the bottom of your screen. Spanish interpretation is also available. To access this webinar in Spanish, in your webinar controls at the bottom of your screen, click Interpretation, which is the icon that looks like a globe, and then click Spanish. And if you want to hear only Spanish without the original English in the background, click Mute Original Audio. Special thanks to Claudia Azar, who is our interpreter. If you have any technical issues, feel free to use the chat function, which I will monitor throughout the webinar. In case you're not familiar with us, League of Education Voters is a statewide nonprofit working with families, educators, and leaders to create learning environments where every Washington student feels safe, supported, and a positive sense of belonging so that they can achieve academically and access the life they choose. Our website is educationvoters.org. We believe that education is a tool for justice. One of the systems that perpetuate racial and disability injustice experienced by global majority communities is our schools. We believe every child deserves an excellent public education that provides equitable opportunities for success. In order to achieve this, we must pursue radical change in our school systems for equity, justice, and liberation. We must build schools and systems that honor the humanity of every student. Welcome to our free online webinar series, Lunchtime LEVinars. We started this series 12 years ago to share information and build knowledge on important and timely issues. Today's webinar is about facts versus myths, understanding Washington's millionaire's tax. We will unpack Senate Bill 6346, Washington State's proposed millionaire's tax, which would establish a 9.9% income tax on annual earnings above $1 million. We'll walk through what the bill actually does, including its projected revenue impact, who would be affected, how funds would support K-12 education, healthcare, childcare, and public defense services, and the tax relief provisions for small businesses and working families. Students from across Washington State will ask questions and provide feedback. And now I would like to ask our panelists to introduce yourselves, starting with Dia. Dia, feel free to popcorn to whoever you'd like to go next.
Hi, my name is Dia, and I'm a sophomore at Eastlake High School. I come here from Association of Washington Student Leaders, and I'm really happy to be here. Thank you. Anyone else? Yeah.
I can go next. My name is Caitlin Butterfield. I'm a senior at Reardon High School, which is in Eastern Washington. I'm on the Advocacy Policy Committee, also in AWSL, and I plan to study political science in college. Then anyone could go next.
I'm Royale Hill from Pasco, Washington. I go to Chiwana High School. I'm a senior. I'm also from AWSL's Student Voice Network. I'm a host of their podcast, Beyond Leadership. And I also serve as Chiwana's ASB president.
Hi, I'm Caitlin Forehand, and I am also part of the AWSL SBN network, and I go to North Creek High School.
I'm Emma. I use she, her pronouns. I run the Balance Our Tax Code Coalition, which is a group of 100 organizations across Washington State advocating for progressive revenue here in Washington. Popcorn, Emily.
Thanks, Emma. My name is Emily Vananek. I use they, them pronouns. I'm with the Washington State Budget and Policy Center. We're a nonprofit that does research and data analysis on policies that affect economic justice in our state because we know economic justice affects us all. And I don't know, Eric, is there anyone else?
Nope. You brought us home, Emily. So thank you so much for being here. Appreciate you all being part of the discussion today. To begin today's webinar, I would like to acknowledge that we are on the ancestral and unceded traditional lands of the 29 federally recognized and non-federally recognized tribes in Washington State, including the Chehalis, Chinook, Colville, Cowlitz, Duwamish, Ho, Jamestown Sklallam, Kalispell, Lower Elwha Clallam, Lummi, Macaw, Muckleshoot, Nisqually, Nooksack, Port Gamble Sklallam, Puyallup, Quileute, Quinault, Samish, Socksweattle, Shoalwater Bay, Skokomish, Snoqualmie, Spokane, Squaxin Island, Stillaguamish, Suquamish, Swinomish, Tulalip, Confederated Tribes of the Umatilla Indian Reservation, Upper Skagit, and Yakima. We give thanks to elders both past and present, our Native and Indigenous colleagues, and the land itself. A couple of housekeeping items before we begin. You'll notice a Q&A function at the bottom of your screen. This is a space for you to submit questions to us. If time permits, we'll have about 10 minutes for questions after the panel discussion wraps up. As always, feel free to send any feedback about the webinar quality to us on the chat function or at info@educationvoters.org. And speaking of the chat function, you're welcome to use it to check in and comment on anything you hear. Welcome, Dia, Royal, Caitlin, Emily, and Emma. We'll go ahead and kick it over to Emma and Emily. You've got a presentation about the millionaire's tax, and then the students will feel free to popcorn in if you have any questions or feedback that you'd like to share, and then we should have time for Q&A at the end. So Emma and Emily, the floor is yours.
Awesome. Thank you so much. I'm not seeing the slides. Are they? Oh, there we go. Okay, great. Yeah, so thank you all for joining us. This is a kind of myth-busting presentation on the millionaire's tax because obviously it's a pretty big policy that's on a lot of people's hearts and minds. And there, with that, there's a lot of confusion and kind of other myths that kind of get spiraled out and about once we kind of play this game of telephone with any type of policy, but especially with something this historic and this impactful as the millionaire's tax. So I'm really excited to be here with you all today and join with my colleague Emily to talk to you all about what's real, what's in the bill, and what's maybe another myth that's been kind of spun about. So we'll get through it together. All right, next slide, please. Okay, so what is the millionaire's tax? Put simply, a millionaire's tax is a tax on income over $1 million at a rate of 9.9% a year. So if you're earning less than $1 million a year, you would be exempt from paying this tax. And it is pretty historic because it is structured as an income tax, but as you'll learn, it is only applying to the amount over $1 million. Next slide, please. So getting into the weeds a little bit, the millionaire's tax is almost a 10% tax on the receipt of Washington taxable income. Washington doesn't have a income tax at the moment. We have a federal income tax. So this is a newer structure of a tax that would be in place in our state. The millionaire's tax would provide a standard deduction for households of $1 million annually and a charitable deduction of $100,000. So how it works in practice is if your household is making $1,500,000 each year, the tax would only apply to that $500. So the total tax amount that would be owed would be about $50. And in this example, you also have that charitable deduction. So let's say you contribute a small amount to a local charity. As long as that's above $500, you would be exempt from paying this tax as you file your taxes for that year. Next slide. And who pays this tax? So again, if you are making over $1 million a year, if you are not making over $1 million a year, you will never see this tax. Around 20,000 of the wealthiest individuals and households in Washington State, which is less than 1% of our state's tax filing population, will pay this tax. So 20,000 of the wealthiest people would end up paying this tax in Washington State. And this also applies to residents here in Washington that live in our state. and non-residents that derive income through Washington State. So they own a business here. They have uh, wealth that's derived from assets here in Washington State. Something that comes up a lot is thinking of professional athletes. They might be stationed here, or they might play a few games here. They might be subject to this tax. Next slide.
All right, I'm going to take it from here. So this question is about, if I have a home that I own or I sell, will this millionaire's tax be come from my home? And that's basically the question. The answer is no. The value of your home and any amounts that you get from selling your home are actually not subject to this tax. It gets a little wonky, and I know taxes sometimes are not fun to talk about. But the way that this happens is because of the way that we actually designed an existing tool in the Washington State Tax Code called the capital gains tax. The millionaire's tax is designed to use the definition of capital gains from that capital gains tax. And the way that that's designed is it exempts any amounts that you receive from the sale of your home. Also, because the millionaire's tax applies to earnings, it doesn't actually affect, the value of your home. So let's say your home is valued over $1 million. That's not factored into your millionaire's tax at all. So if you're worried about your home at all in any way, shape, or form, it doesn't fall under this tax. Next slide. How are businesses impacted? This is a really big question because a lot of people get their income from their business that they own. So there's a lot of key ways that businesses are protected by this tax. And I want to go over them because all of them work together to ensure that this tax applies to the wealthiest 20,000 households in our state. So again, only 20,000 households, less than 1% of the state will be impacted by this. And here's why. So first, there's a 100% credit for any business and occupation tax or B&O taxes that you pay to the state of Washington. This is a tax that businesses pay to our state for the right to do business in our state. So if you have a business in Washington State, you are paying a B&O tax of some kind. This tax, so like let's say you're a business who may owe a little bit from the millionaire's tax. Any amount that you paid to the state goes to directly offset that taxes owed from the millionaire's tax. So let's say I owed $20,000 from a millionaire's tax, but I paid $45,000 in B&O taxes. I'd be completely zeroed out in my millionaire's tax. I would not owe a millionaire's tax at all. This helps prevent any sort of double taxation because you're getting taxed from the state on your business taxes. And we want to make sure that that's offset. So the second part is that there's an exemption for the sale of your qualified family-owned small business. So this is something that, again, is carried forward from our capital gains tax structure. It's exempted in our capital gains tax. Therefore, it's exempted in our millionaire's tax. Third, because of the way that this tax is designed, it uses a federal calculation that exists on your federal income tax called your federal adjusted gross income. Sometimes you'll see this called AGI, but what it does is it compiles all the various incomes that you have throughout the year. It could be your income from the work you do every day. It could be your business income. When business owners report their income on their federal income tax, they get the opportunity to deduct any expenses and any costs that you had to do business so that you're actually being taxed just on the net profit or your actual profit. This means that we're not looking at, all of the money that you bring in the door, just how much you made. So the vast majority of small businesses will actually not be subject to this tax. If we go to the next slide. We're about to get a little bit wonky, so just bear with me because the way businesses work is a lot of businesses operate as something called a pass-through entity. This simply means that you could be running like an LLC, a sole proprietorship, some sort of S corporation. I know it's getting really wonky, bear with me. It's just how the business is structured. And essentially what it means is that the profits from that business pass through you as the individual and onto your personal tax return. So you report that profit on your tax return when you go to file your taxes. The millionaire's tax actually provides a couple of really key benefits for pass-through business entities. First, you're going to receive a credit for the share of pass-through business income. So if you elect to pay your taxes through your pass-through business entity, you get a credit back. And two, you get to claim a really highly beneficial federal deduction on your own personal federal tax return because of the way you're claiming your taxes. So I'm going to keep it there because I could go into the weeds even further on this. But I just want to just really highlight there's a lot of safeguards for businesses. I know there's already been a question that's already been asked about that. So hopefully this starts to speak to the number of ways that businesses are protected. Next slide. Okay, Emma, go for it.
So another question that comes up a lot when we're talking about the millionaire's tax is how much is raised from the millionaire's tax and where will the money go? So, the millionaire's tax is estimated to bring in over $3 billion annually, but that income or the revenue from that will not come in until 2029 because of how long it'll take to implement. So it's not like the whole enchilada that will fund our state forever and ever, but it's a really good start at restructuring our tax code. And it will be dedicated to funding K-12 education, healthcare, higher ed, human services, and expanding tax credits for working families, which is really exciting. And so it's a big chunk of a lot of different things that will really support working families here in Washington State. And even though it won't come in immediately, it's a huge step towards restructuring how we're funding our education system here in Washington. Next slide.
All right. So let's talk real generally because that's like a pretty big, there's a long list of things that this would fund. So how this will break down and how it's currently designed. And I'll also add an asterisk or a note that all of this is getting negotiated right now. Like quite literally right now, lawmakers are deciding how these funds should be spent. So we have a moment in time where we can influence that. So we'll make sure that you know what those next steps are. But as it stands right now, here's how it breaks down. So the vast majority of this is going to go towards the state general fund with very specific things that are carved out right now. And the other part is a small amount that's going towards a relatively small amount, I should say, of the actual revenue generated is going to go to a local public defense funding stabilization account. And I'm going to kind of tease this apart a little bit more. So let's go to our next slide. So first, one of those very specific carve-outs is an expansion to our existing working families tax credit. You may know this. You may have parents that have claimed this tax credit. You may have family friends who have claimed this tax credit. It started being, it got passed in 2021 and has been reaching people all across the state. Hundreds of thousands of households have claimed the cash benefit from the working families tax credit. And the millionaire's tax actually goes to expand that tax credit to a lot of people who currently are just excluded simply by your age. So right now there's an age, there's a age exclusion that's carried forward from the federal design of this similar tax credit. And basically means that if you're under 18 to 24 or 65 and older, and you would have received this credit, right now you're not getting that credit. So this millionaire's tax would expand to anyone 18 and older to be able to be eligible for the credit. There's other ways that you're eligible based on your income, but we want to make sure that this arbitrary age restriction goes away. And that would start to expand once this tax starts being realized in 2029. That's the first specific carve out. Let's go to the next slide. There's specific sales and use tax exemptions. So Emma talked about this a little bit ago, but the millionaire's tax represents a big shift in the way that we tax people here in our state. Taxes are often seen as some sort of like bad thing, but in reality, taxes fund the things that we can't do by ourselves. Things like education, things like roads, infrastructure, all of the things that we rely on. And in Washington state, we have very limited ways that we are able to tax people right now. And a big way that we tax people is sales taxes. These are called uniform taxes. So a sales tax is not something that, gets to determine, whether you are living on $30,000 a year or $2 million a year. So that sales tax ends up being paid the most by people with low and middle incomes as a share of their income. So what this bill would do is it has a specific exemption to fully eliminate sales tax from diapers and other hygiene products like soap, toothpaste, shampoo. These are just things that everyday people rely on all the time. Unfortunately, we currently pay a sales tax on those. This bill would eliminate that. Let's go to the next slide. Oh, do you want to ask a question, Rael?
Yeah, I wanted to ask, are those the only like products affected by the sales tax exemption or
Right now, yes. Yeah.
okay.
The sales tax makes up, if we can go back a few slides, Eric, that would be great. Even further, perfect. Okay. We'll find out the slide that we were at. But the sales tax, it's honestly pretty wild. We rely over half of our $76 billion budget relies on the sales tax. So what it means is that if we're going to get to a system that fundamentally changes how we raise revenue in our state, we have to make big changes. So this millionaire's tax represents a big change. And even though these are a small portion of the sales tax, like diapers and hygiene products, it still is a substantial impact, especially on low income and middle income households that are bearing the brunt of this.
I got you. Those are important things. Thank you.
Yeah, totally. And then let's go to the next slide, Eric. There's also major expansion. So like I talked about the safeguards for small businesses to protect them from having to pay this tax. There's also a lot of benefits that will come to small businesses from this tax. So as currently designed, there's two major improvements for small businesses. So number one, I talked about that business and occupation tax that businesses pay here in Washington state. That there's a credit right now on the books for small businesses. And right now, and that credit goes to making sure that their taxes are reduced if you're a small business. That credit is now doubled under this bill. Second, if you're a small business and you have $250,000 in gross receipts, you will no longer have to pay that B&O tax in 2029 if this bill is to pass, if the millionaire's tax passes. So these are some really key ways that we're trying to safeguard small businesses. And I can get into some more nuance on our really unique business B&O tax because it's pretty complicated. But these are some really key changes that we've been wanting to see for some time. So let's go to the next slide. And then the last piece is there's about 150 million carved out towards a local government public defense funding stabilization account. Essentially, it is for localities across the state to use towards public defense. Previously, this got changed a little bit, just even midway during session. So I'm not totally sure how this is going to look once the final bill is done and all the negotiations are complete. But right now it's sitting at 150 million carved out towards that account. And that's mostly so that localities can help balance their budgets. Let's go to the next slide. Emma, go ahead, take it away.
Sorry, I'm getting too into the chat. Okay, back to presentation mode. So this comes up a lot. Could the income tax threshold be lowered later? And the ultimate answer is potentially. because it's not, even though it's not the intention of this bill as we see it, as it's written right now, and as we're asking the wealthiest in our communities to pay what they truly owe in taxes. So this is a really historic moment for the progressive taxation movement because this reform impacts those with millions of dollars in earnings every year. So multiple ultra wealthy folks. And our long-term goal with this tax is to rebalance our tax code and to make it right side up. So this would require a big this would be a big change and really bring equity to our tax code by making the ultra wealthiest in our communities pay what they truly owe in taxes. And this policy really helps, is like an example of factoring in that ability to pay that Emily has outlined before. Starting with the policy, like the millionaire's tax, it will help make sure that the wealthiest pay more of what they truly owe in taxes, and also will help take the pressure off of us working Washingtonians, and by factoring in that ability to pay. So it's really important to stay grounded that our tax code is already designed to over rely on taxing middle income and low income earners. And this is an example of a progressive taxation opportunity that asks the ultra wealthy to pay what they truly owe in taxes as well. And I think it'll become more clear in the next slide too. So is it constitute or isn't it? I think there's a misconception broadly in Washington that an income tax is unconstitutional under Washington state law, and ultimately the constitutionality interpretation is determined by the Washington State Supreme Court. And right now, our state constitution doesn't outright prohibit an income tax. The issue at hand with this kind of newer kind of tax policy is interpreting income as property. So income or property, as it's taxed, is subject to a thing called this uniformity clause, which was written, I think, like 200, 100 years ago. So it was way back when Washington was first getting up and running. And so it really decided that property is taxed uniformly and it's applied at the same rate given any class of property. So you can't really tax property differently depending on what it is. And so this question that comes into play is, can you tax income like above a certain amount differently? And that really calls into question, is it property or is it a separate thing? And the income tax or the property tax or the millionaire's tax, the court would need to overturn the definition of income as property. And that's ultimately up to them. And I think really what I want to highlight is that this was when this uniformity clause was written, the Washington state economy looked a lot different. And so at the time, it probably, maybe perhaps it made sense that income was considered property and property should be taxed uniformly. But now, as we see with new technologies coming online, new industries growing, it's really a matter of, does this really fit what the original intention was for? And that's what the Washington State Supreme Court would examine. So, next slide. And another question that's on everybody's mind, will it pass? And the answer is yes, with your help. So, really, what we need your help with is to call your lawmakers. So, we're hearing in real time that calling your lawmakers and really picking up the phone, dialing their number, and saying, I support a millionaire's tax, and I think you should too, will really make a difference because there is, again, this is a very high stakes and you know, I would say like controversial, but I think also just misinformed bill. And so really having constituents call their lawmakers and tell them that you support their support of the millionaire's tax is the reassurance they need to be bold and take the stand for working Washingtonians. So really calling up your legislators will make a big difference. I also know that League of Education Voters is circulating a group letter for education orgs that are willing to sign on to support. And also, you can use this QR code and the link that I will provide in the chat to just quick send a email message to your lawmakers. And really where we're at is we're in the like final stretch of it all. So after the next week or so, the legislature will hopefully pass the millionaire's tax, and then there will be the kind of longer fight ahead, which is it'll go to the governor's desk where there'll be still some tweaks through his line item veto, and we'll look for some actions there. There'll probably be more persuading of the governor they'll need to do. And then after that, it will probably be challenged in court, like I said, because of that uniformity clause. So that's when the court will decide is income property. And then after that, it will be challenged at the ballot because we know that there is a lot of folks. It's a hot topic in Washington State, and a lot of folks are concerned about all the taxing millionaires, and millionaires definitely don't want to be taxed. So that will go to the ballot probably in the midterm elections, which is next November. And so then voters will also get a chance to weigh in. So another thing that's kind of come up as we talk about the millionaire's tax is that, oh, the legislator is passing this, like, when will we get our chance to make our opinions known? Well, you will at the ballot. So this is going to be, again, this is a part of a much bigger process. This is just getting started, and there's going to be a lot of opportunity to weigh in the next few months too. But we just got to get across the finish line. All right, we'll open up to questions, I think.
Okay, well, thank you so much for presenting, Emma and Emily. Really appreciate the information. I want to open it up to our students first. Any comments, questions, feedback that you have on everything that you just heard? And feel free to just pop in. Yeah, Caitlin, go ahead.
When would this go into action?
Great question. So if it were to pass right now, we are a state that doesn't have the infrastructure to immediately put it into action. So we need to take time to set up those infrastructures. So it'll be effective as of 2028. And then we'll start collecting those revenues in 2029. And that's just based on how tax systems work. You always pay your taxes or you file your taxes for the year prior. So it gets a little wonky, but 2029 is when these revenues will start to come in.
Okay, yeah, Caitlin B.
I don't have a question, but I do have a comment. As somebody who lives in Eastern Washington, I think some of the biggest concerns I've heard is just where is the money going? And I think it's very important that the money that they're collecting, it's going towards places that desperately need it. So, sorry. I live in a community, like a rural community that thrives on small businesses. And I think it's so important that it's going towards giving them the tax exemptions from the B&O tax and just kind of supporting them in general as well.
Yeah, I would just say that's a really great point, Caitlin. Like, one thing that I'm Nancy, I see you have a question in the chat about, whether this should go directly to the Education Legacy Trust Fund or not. I wanted to just take a moment to respond to that because the general fund funds quite literally so many of the big priorities in our state. That includes things like health insurance systems, things that provide free health insurance, all of our basic food, a lot of K-12 construction, a lot of things that we all rely on. And so for this to go majority to the general fund, things like the B&O tax relief, those are all really great things. And I'll also say, like, we're going to really start to experience some downstream impact from our federal government, who made some really, really big cuts to things like healthcare and basic food assistance last summer. Those are going to start to impact us in a big way starting in 2027, 2028. So the timing of this is really important for us to pass this session. So just also so much gratitude, Caitlin, for that remark. Thank you.
Yeah, Dia, go ahead.
Yeah, so you guys were saying that it would be helping things and going towards things like healthcare and schools. Like, how is it being like, how is it being distributed, or like, how do you guys figure out like, oh, like this much is going to this, or like, how are you guys making that happen?
Yeah, that's a really great question. And the way that all of that budgeting happens actually happens from our lawmakers. So, lawmakers are the ones that put together this massive, massive budget. Like, our general fund is like $76 billion. And they figure out, exactly where to put that. Some of that's earmarked. So, it says X amount goes specifically to X thing. So, that's like, you know, $2 million going towards XYZ priority that's funded under the general fund. So, really, a lot of the safeguards that we have in our system actually come from the people we elect into office. And that's why it's also so important that you contact those lawmakers and make your priorities known, because they are the ones who are getting to design where these things go and where all this money goes. Some of it's earmarked,
Yeah.
some of it's just broad general fund funding, but all of it is our general fund. We can't fund everything under the sun. There are parameters, and that's why things like healthcare are prioritized and stuff like that.
No, thank you.
Okay, Royal. Yeah, I see you got a question.
Yeah, this is a little more specific to where I am in my school district. Recently, we were unable to pass our renewal levy. And as ASB president, I've been able to like get a little better insight in like the funding and like financial side of how schools run and things like that. And I recognize how much funding we receive from the state, additionally to the local taxes that people within my city pay. I just wanted to comment that I think this is a really important thing, not just for people in my area, but people across the state. And I can understand like the concerns about where the money is going. And I think that you just answered Caitlin's questions very well. Um, but I think this is a really important and bill that should be passed. It's supporting the people, and I think that's really important.
Thanks so much. That's such a good grounding. And local levies are like one of the few ways that like schools are able to fill in the gaps, right? Like state funding only goes so far, and those local levies are so important. But when we have such an upside down tax code, it makes it really, really hard to not get that money from people who are supposed to benefit the most. We want people to be able to be supported and stuff like that. So thank you for all your great work. That's so cool.
Yeah, we sorry, I didn't mean to interrupt again, but we're running it back. Like we're running it through another special election. So hopefully it passes again. But they made a significant change into the amount that it would be taxing to fund. I guess I don't like specifically explain it, but it is going to affect like the kids that are younger than me, who are probably going to have some sort of cuts to programs and things like that. Our school district's going to have to change budgeting, so I think something like this could definitely help out with the future of kids in my district and kids all across the state.
Yeah, thanks so much, Royale. And appreciate the questions. And students, if you have any other questions, feel free to raise your hand. And it makes it really easy to know to call on you. Now we do have some time to take questions from the audience. And so here's one that was in the chat. And again, if you could put it in the Q&A, that way we can make sure that it doesn't get lost. But here's one that I thought was pretty important. So it's about what is actually considered income under this proposed bill. So the question is, first of all, what are the professions of the individuals making over $1 million per year? Are they earning this annually, or is the income the result of a one-time event such as selling assets like a business or stock? Additionally, what percentage of the 20,000 individuals are earning over $1 million each year versus just earning it as a one-time selling event?
Eric, so sorry. I was just typing to one of the other questions. Can you repeat it one more time?
Yeah,
I'm
no
so sorry.
worries. Yeah, so in the proposed millionaire's tax, what is considered income? Are we talking about like W-2 payroll earnings over $1 million,
Mm,
or could it also include like stock sales, for example, or
yeah.
a one-time selling event? So in other words, is this tax aimed at folks who on their paychecks it adds up to over $1 million a year from their jobs? And what are the professions of these folks who are making over $1 million a year?
I mean, it's a really good question, and I think there might be some data analysis we can follow up with on like specific jobs, but a lot of the people that we're talking about who are earning over $1 million a year, they're sometimes coming from like a mix of different things. You could have like stock portfolios that are, really, really big, but also at the same time, we have a state level capital gains tax that, also interplays with this millionaire's tax. So if you're paying your capital gains tax, you're not going to there's a credit to offset um, your millionaire's tax if it pushes you into that millionaire's tax bracket. Um, so that's like intended and designed intentionally so that you're not double taxed. And so yeah, I mean, like you could potentially be getting income from a W-2 in this situation, but a lot of people are, um, making money all sorts of different ways. You could be getting, very passive income like dividends and interest from a lot of accounts that you have. You could be um, owning a very, very, very large business, for example. Um, yeah, there's a lot of different ways that this income, but like it's based off your federal adjusted gross income, which factors in all kinds of income. So like it's your W-2s, um, all sorts of different income goes into that AGI. And the bill is specifically designed to make sure that we're really ensuring that it's people with a lot of like annual wealth every year.
Great. Yeah. Thank you. Caitlin, I see you got your hand up. Go ahead.
So I was just kind of wondering, like another big thing I've heard is what happens if we start depending on these people making over 1 million and then they decide to leave? Like they go somewhere else where they're not getting an income tax? Do we have like is there a plan
It's
for
a
that?
It's a good question, but I also would say we already depend on people with low and moderate incomes the most. So like I would put that back because like very like people with who are earning over $1 million, those are often people who are not having to make hard financial decisions on the regular. If you have people in your community or you yourself, you may be making every day a conscious choice, whether I pay for food or I pay for my medications that day. Or you might be saying, I have my rent bill, and then what does that mean for my next monthly costs? Because of the way our tax code is designed and it relies on these uniform taxes that don't get to see what your income level is, we already have a system that taxes people with middle and low incomes the most. So, like, that's quite literally our reality. So, I would say to that, like if you are making over $1 million a year, you have the ability to pay. And right now, our system is designed and it asks those same people to not pay as much as, me, the rest of my family, the rest of my community that I really care about. So that's what I would say to that. People often, lower income populations, end up having to move more regularly because it's harder to get by and you have to find places that are affordable to live. So I would just say the current system that we have is woefully upside down. And this is actually not even scraping the surface of how other states and other areas in our nation tax people with that amount of resources.
And something else I kind of want to add because I think it touches on Linda's question, which I really like in the chat. It's will basically businesses and individuals move out of state, and will that like cause brain drain and harm future jobs and employment opportunities in our state? And I think that this is really interesting because the same questions and concerns really came up with our capital gains tax here in Washington State. It's the only other progressive tax here in Washington State, example of a progressive tax. And that was a major concern with that tax coming about. And what we learn and what the research shows from the last few years of the capital gains tax is that we've grown more millionaires, we've grown more billionaires here in Washington State because it's a great place to live and it's a great place to have businesses and school because of our schools and things like that and our natural resources. So there's so much here that we really should value and really stand up for than just our billionaires and millionaires because we can grow them pretty regularly, which is exciting.
Yeah, I think I will just piggyback on that. Just one last point is that a lot of talk is around, how this might incentivize people to move, or um, I would just point to the fact that in Massachusetts they passed their fair share amendment, which is a millionaire's tax, similar to ours, and they actually saw the number of millionaires grow in their state. So I think I would also point to the level of opportunity that can come when we actually fund the systems that we rely on, and that a lot of businesses and the people who generate their wealth in our state, those people rely on our same systems all the time to grow their wealth. And so it's about paying more equitably into those systems.
Yeah, Dia, go ahead.
Um, because of putting like the mayor's tax forth, like I know that Washington State already does like rely a lot on like sales tax, like from people from lower income families as more. Would it would this tax shift help like kind of bridge that balance, or would it kind of stay the same as it is now?
This is a really good question, Dia. It's a start to broader tax reform that needs to happen. So just to ground us again, like we are the second worst tax code in the nation when it comes to who pays into our system. That means that we actually were the worst, but in 2021 we passed our capital gains tax and our working families tax credit, and that started to move the needle. But
Mm.
again, like this tax will bring in about $3 billion annually. Our budget is like 76 billion plus. So we're talking about, even though this is a very, very big monumental change, we're talking about a system that needs to be fundamentally redesigned. And that takes a long time. And I
Mhm.
think sometimes that's hard when we are really wanting and seeking that really quick change. Legislative processes take time. It takes a lot of deliberation and a lot of intentionality to craft these systems so that it better works for us. So I would say this is a start, and it's ultimately we want a tax code that's right side up, and that's going to take quite a bit of time, and it's going to take all of us.
Thank you. Yeah.
Right. Yeah, Royale, go ahead.
I'm noticing like a lot of comments in the chat about millionaires leaving. I think it's just really important to consider how many times we've seen like um, income tax implements for people making a certain amount of money across the country, and how often we notice that not only do like Emily was saying, we don't just see people staying, but more millionaires happening to pop up in that area because of the fact that there's more opportunity. I think that's something really important to consider. And also the fact is that we are the majority, the people who are trying to get this passed and trying to get this enacted within Washington is we're the majority. We're the people being supported not only by this tax, but by the taxes that we pay. And we can be concerned about people leaving, but the important thing is that people who will be supported by this will be the ones who will come up and then take place and carry that I guess burden, but also you are now responsible to support the society that you live in, and that's something we're all responsible for. So I just wanted to add that.
Yeah, thanks so much, Royale. Really appreciate that. So one question and theme that I'm seeing, not just here in this particular webinar, but also just in general about fears surrounding Washington State's tax reformation ideas, which is this, and Emma, you alluded to this a little bit in an earlier slide, which is the fact that yes, right now the tax is at folks who would make more than $1 million, but it could potentially be adjusted. So, what do you say to folks who are worried that this income tax for millionaires will then come for the rest of you?
I would say again, we already have a system that is coming for the rest of you. Like that is our current reality. Like it full stop, there's no question about it. As a share of your annual income, low income people are paying 14% of their annual income in state and local taxes right now, compared to the top 1%, which pays only 4% of their income. Like that is just so backwards. And so what I would say is that we need to keep making these shifts in our tax code so that we can stop relying on these taxes that don't work for us. The sales tax is very, very inequitable. There's so much research behind how bad that the sales tax is for people with middle and low incomes. And then when you layer on something like our business and occupation tax, which I talked about earlier, that kind of acts like a sales tax in some ways. It doesn't, our B&O tax is designed to act on gross receipts, which is just like all of the money coming into a business without any care to how much it costs to run that business. So that's what I mean between the difference between a profit, your actual profit, and the gross receipts, like the money coming in the door. That's quite vast. And so if you increase our B&O tax, what that means is that business owners are like, okay, I just have to increase my costs then. That just ends up coming down in the form of like increased prices. So we know we have these tax tools that prop up the state services that we rely on. And so if we can start to shift towards more equitable systems that factor in your ability to pay, so like your income level, that's the system that's going to get us to much more equity in how we fund the services that we rely on. So yes, it could change down the line. And I want to see those sales taxes come down. I want to see those B&O taxes change to being applied to profit rather than your gross receipts. So we're talking about big change. And I know that sometimes can be scary. I feel like the tax code is like the car mechanic world of policy world. You know, like you go and you bring your car to the mechanic and you kind of don't know what's going on unless you really, really do know. And you're given a bill at the end of the day. That's the same thing with taxes right now. And I think that we have a real opportunity to kind of lift the hood up and see what the tax code actually looks like, and really make a change. And I just really appreciate being here. This has been so awesome. Thank you for all these great questions.
Yeah, and thank you, Emily. And the students, I'll give you a moment to think about final thoughts, because first, Emma, I'd like to see if you have any final thoughts you'd like to share.
Final thoughts. Well, I think that there is a little bit of discourse of like where public support is for the millionaire's tax, and I just also want to add that like there was a historic turnout of folks signing in against the millionaire's tax, and then there was a um like a realization that a lot of folks have been duplicated or falsely signed in cons. So I just want to put out there a little bit of skepticism of that, like there is a lot more public support for this than I think the mainstream media wants us to believe. Not to sound too conspiracy theorist about it, but it really is like to Emily's point, it is something that will benefit us all. We just really need to believe and trust in it and to really like advocate for the things that we do want to see funded ultimately, because that's like what we do have the power to do. And also, when the state is fully funded and the things that we care about are fully funded, people really do benefit. And that's like the power of the state is really to help fund the things that we all care about that, philanthropy can't. And so while we love like the folks that are contributing and doing a wonderful job donating and building up these foundations that do amazing work, the real benefit really comes from our state having power to provide free school meals or provide healthcare access that like a philanthropic donor can't do. So, yeah, so I just want to put that out there of like, I think public opinions are shifting, especially with our tax system in Washington State, and I think it's because of the education that we're doing here and kind of continuing to educate our communities because I think this time, 5, 10 years ago, we would not be having this conversation of why an income tax ultimately is more beneficial than all these sales and property taxes that we're all subject to. So
I would also just piggyback on that, Emma, because like one thing that is really important to point out is that we actually have some real life, real data examples of voters upholding this kind like these kinds of taxes in our state very recently. So in 2024, there was an effort that was bankrolled basically by a local millionaire named Brian Haywood. He put on the ballot a lot of these initiatives to try to repeal the capital gains tax that I've talked about. So this is a capital gains tax that directly supports like early learning, reduce low cost childcare, and like school construction. So when that went on the ballot in 2024, it actually had the highest turnout of anything on the ballot. That included the presidential election. So like it was upheld by voters, and voters said, no, we do not want this tax to go away by 64% and over. That means that there were only 2 counties in our whole state that voted against the tax. So I think that is really important to note, because we already have seen in a big way that voters really, when they see that like that these taxes on people who are able to pay go to fund things that we care about, it's a no-brainer. And so yeah, I just wanted to point that out, because we do have some examples of recent efforts to do these kinds of progressive taxes that are really upheld across party lines, and 64% plus is a huge amount.
Yeah, thanks so much, Emily, and thanks, Emma. Okay, students, any final thoughts? Caitlin, Dia, Royal, that you'd like to share?
Um, I wanted to point, because this just nod your heads. This is going on a ballot if it's passed, correct? Okay.
Yeah, it'll
Um,
be brought to the ballot via an initiative.
so I mean, I'm not 18 yet, but I will be by the time it's on the ballot. And so I'll be voting for it, and I'm pretty sure everyone in support of it will be. I don't think I'm necessarily brainwashed, but I will say that I think it's really important to use your voice and use the ability and power to vote, and put people in office that you think will most use these funds the best. I don't know if I properly worded that, but we all have the duty to make things like that happen. And if you think that there is specifically talking to the adults here, but if you think there's people in power that aren't going to do right by us, even if we agree that this is something that we all want, or a majority of us want, then we have the power to remove them and put someone who we think is better fit to do that. And so we just have to make sure that we are actively using that voice, and we are continuing to make sure that we're heard. That's all I have.
Yeah, thanks so much. Well said. Caitlin, go ahead.
I just wanted to mention that, like, when I signed up for the LEVinar and I kind of started asking around, like, what did different adults around me think about the tax? A lot of the things that they said were reasons they didn't support were just misconceptions. So I think it's kind of like what Emily, Emma, and like really everybody's been saying is that we have a lot more support for it than we think that we do. And like the same thing as Royale, like I'll be 18 by the time that this is on the ballot, and I'll definitely be voting for it.
Yeah, thanks, Caitlin. All right, Dia and other Caitlin, anything you'd like to share before we wrap up?
I just wanted to add that I think that it will really help like Washington's general, and I think it's going towards something really important. And I think supporting it itself is really important as well. And I'm really happy to be on this webinar and learn more about it. And it definitely cleared up my confusions I had about the tax or what I've been hearing around. And it was really helpful. Thank you. Thank you so much.
Great, thank you. And Caitlin, did you want to share anything?
I just want to say thanks for the opportunity, and this was very, very educational. And yeah, that's pretty much it.
Okay, great. Thank you. All right. Well, thank you, Dia and Royal and Caitlin. Emily and Emma, and thanks to all of you for participating and submitting questions. Really appreciate all the comments in the chat. Our next webinar will take place on Friday, March 20th, and we'll recap the 2026 Washington State Legislative Session. Also in April, we will host a webinar on an upcoming report by the Learning Policy Institute that spotlights Washington State's supports for students experiencing homelessness. For both upcoming webinars, we're working to finalize the panels, and we will share registration information on our website and our social media channels. Our website is educationvoters.org. Just go to events, then lunchtime webinars. Spanish interpretation and closed captioning in English will be available. Thank you to each of you for joining us today. If you have additional questions or comments, please send them to me at Eric, A-R-I-K, at educationvoters.org. A recording of today's presentation and the presentation slides will be available on our website and will be sent to you in the follow-up email to today's webinar, which you should receive in about 24 hours. Feel free to share the recording and slides with your friends and colleagues. If you'd like to learn more about League of Education Voters or support our work, please visit our website, educationvoters.org. Thank you again for attending. Each one of us has the right to feel safe and valued. Together, we will fight for a world in which true educational and economic equity exists. We look forward to seeing you at future webinars. Caitlin, Royal, Emily, Emma, Dia, and Caitlin, thank you so much for being here. Really appreciate all you do to support Washington students, families, and communities. And I hope you have a wonderful rest of your week.